Hey, Jesse Lipscomb here with Roadmap Tax Services, here to talk about your February 2023 tax tips. So, this tax tip is specifically designed for people that have already set up a C corporation or an LLC. Okay. If you have either a C corp or an LLC and you want to set up an S corp or an S corp election, you have until March 15th. And if you have an LLC and you want to either set up the initial entity election classification as a single member or disregarded entity, partnership, or a corporation, you got to do that by March 15th as well. So let's dive into it a little bit. March 15th deadline. Okay, this is for your 2023 entity election. Once you do this the first time, you don't have to do it again, but you do need to do it once. So again, if you have a C Corp and you want that to be elected as an S corporation, the IRS says no more than 2 months and 15 days from the beginning of the tax year. What does that mean? That means March 15th. Okay, so if you've set up a C Corp or even an LLC on your own through LegalZoom, it doesn't matter. It's not an S Corp unless you file the 2553, and you got to do that by March 15th in order for it to be an S Corp effective the 1st of January. Also, the IRS says in Form 8832 that an LLC cannot have their entity classification take effect more than 75 days prior to the date of the election. What? Basically, if you want to have a 1/1/2023 effective date, 75 days, you have to do that by March 15th, okay? And we're going to talk about this a little bit more in a minute. But so regarding an S Corp election, okay, this is what the 2553 looks like. The link right here will get you to it. Bottom line, you need to fill out page 1, page 2, fax it over to the IRS by March 15th. Speaking of which, why would you want to be an S Corp in the first place? Well, every corporation, not an LLC, but every corporation is born a C Corp. And that means you have to pay yourself wages. Profits are taxed at 21% by the IRS, 8.84% for California. And when you want to take out profits, those distributions are taxed as dividends. Now, on your personal return, you might be in the 0%, 15%, 20% tax bracket federally. And in California, it doesn't matter. It's just ordinary income. Most of us pay 9.3% tax. And that's why people say, oh, God, double taxation, I don't want to pay it. Here's the deal. You're paying yourself a salary and you're trying to reinvest the profits back in the business. You don't have to take a dividend. So if you're trying to grow the business, C Corp will work out great, 21%, 8.84. Those are the only taxes you're paying. You're reinvesting everything back into it. Okay. If on the other end, you want to enjoy the fruits of your labor, then you can choose the S Corp election. There's zero IRS income taxes. Even California is only 1.5% of your profits with an $800 minimum. When you take money out of it, the distributions themselves really aren't taxed. It's just the profits are taxed as ordinary income, both by the IRS and by California. So again, if you're trying to enjoy the fruits of your labor for income, S Corp's a great idea. By the way, what's that asterisk right there? It's the Section 199A qualified business income deduction. Assuming that your wages to profit ratios are in alignment, you may be able to get an extra 20% deduction on those profits. So for example, you make $100,000 of profits in your S Corp, you may be entitled to an additional $20,000 deduction on your personal tax return. Okay, now we're talking about LLCs. You've already set up an LLC. You need to have your entity election classification. What is that? Here's Form 8832, entity classification election. You're going to notice it says page 2 here. I did that. I screenshot this and merged it so that you can see what the IRS is talking about. You need to choose this LLC is going to be taxed as a corporation, as a partnership, or as a disregarded separate entity. Oftentimes we call that a single member LLC. And again, here's the link, IRS Form 8832. So if you are a disregarded entity, single member LLC, you don't have to pay yourself wages. There's no specific LLC IRS tax rate. California is going to charge you an $800 flat tax. and the gross receipts tax, which I'll get into in a minute. When you take money out of it, there's no additional taxes on that per se, because it's just considered your profits, which are taxed as ordinary income by the IRS. Unfortunately, you're going to pay self-employment taxes. That's 15.3% of your profits up to certain thresholds, about $160,000 or so here in 2023. California ordinary income taxes. The best reason to have an LLC tax as a single member LLC disregarded entity, it's just your new business and you're not profitable. Partnership. Partnership's interesting. It's still subject to the $800 fee and the gross receipts tax. Profits will be taxed at the ordinary rates of the partners. But if this is an active business, it'll still be subject to the 15.3% self-employment taxes on the profits. Now, if it's a passive entity, if you're investing in real estate, for example, then those self-employment taxes don't apply. And that's why we think that an LLC tax as a partnership is a great tool for rental properties. Gross receipts taxes, by the way, on either single member LLCs or partnerships, you're going to notice gross, i.e. before expenses. If you make over $250,000, the gross receipt taxes apply. And just for fun, hey, you make over $500,000, it's $2,500. Over $1,006,000 of additional fun California taxes. And it's funny, they don't even call it a tax, they call it a fee. Whatever, you pay it on your tax return. An LLC taxes, a C Corp and S Corp follow the same tax rules as C Corps and S Corps. Again, in fact, you even file the same tax returns, the 1120 for the C Corp, 1120S for the S Corp. Interesting for real estate agents out there that have an LLC, you can still use it as a tax strategy as an S Corp. However, keep this in mind. The DRE says right there on DRE Form 201, the corporate license application, there are no provisions in the Business Professions Code which authorize a limited liability company to become licensed as a real estate broker. So if your goal is to be a real estate broker and have your corporation licensed, really there's only one way to go. You have a real corporation and that's it. You can choose the real California corporation, have it taxed as an S Corp. That's fine. There's your 2553. But LLC is just not going to make it happen. So anyway, quick recap, Form 2553, that is to get your entity 2023 S Corp election as of January 1st. You got to do that by March 15th, and that's good for either regular C Corps or LLCs that you want taxed as an S Corp. Form 8832 for 2023's entity classification election. You got to get that done by March 15th, and that's for you to choose either disregarded entity / single member LLC, partnership, or C Corp. And then last, just keep in mind that you real estate agents out there, LLCs can't be licensed as corporate brokers. Okay, if you need any help, roadmaptax.com. There's our phone number and email. Wish you all the best here in 2023, and we'll talk to you again soon. All right, bye now.